Just wrapping up Thursday here. Just do a little market update into the close. Should have had this out earlier, but I had to tighten up on a few positions. I think going into tomorrow, we have GDP and then the Bank of Japan tonight, so we'll see which one. It may be that BOJ overshadows GDP. I don't know. We'll see. I'm not one to really guess the numbers. I think that's really more of a fool's game. But supposedly there's good reason to think that GDP print's going to be better than expected quarter over quarter. I mean, let's not lose the fact that the trend is growth is slowing. If you look at the year over year rate of change terms, GDP is slowing, but doesn't mean you can't have bounces in GDP, right? Quarter over quarter, or sequentially. But I think the main thing, I was pretty heavy long 30-year, so I took some risk off there. We had a nice little bounce, made some money, and let's talk about the long bond, I guess, first. So I've been talking about this dip on the daily chart in treasuries. I mean, we were pretty overbought. That was obvious on the daily level, right? It was obvious on the weekly level. Okay, all back here at the top of the cycle. So I've been talking about being patient buying this dip, and you can see this is how you work an intermediate term pullback within the context of a bigger picture or a longer term uptrend, right? So you can see the wave structure here. This was a bearish downtrend, but you can buy when it gets oversold. So we bought some here. I sold some out, kept the core position. I got heavier again. Some of which would I let go of yesterday and then today. But point being, when you buy well and you're sitting through this intermediate term pullback like this, I mean, there was opportunities to buy here, sell some out the next day, buy some here, sell some out, and that kind of brings your average down, and that'll allow you to kind of sit through the pullback, and then when the trend reverses and the cycle moves back higher on the longer term time frame, then you can start to realize some nice profits. So that's what we did yesterday. I bought this dip here today, and then I lightened up on my positions. I just don't want to have a lot of long bond or treasury exposure with. If GDP is better than expected and there's a surprise there, well, the idea is that, okay, the better data means more hawkish Fed, which means stronger dollar. Dollar up, rates up, bonds down. So I don't know if you would think that the dollar and the correlation also is if it's dollar up, stocks definitely like dollar down better than dollar up, but stocks could also take a better GDP as everything's fine, and they could push stocks to new highs also. I don't really try to want to get too wrapped up in trying to predict where things go or what the numbers are going to be. And the numbers are a coin toss pretty much anyway. That's not the point in trading. You want to have an idea of where things might go, obviously, but it's more about how you trade, what's happening. How you manage your risk around the trends. And that's what my company and what I want to do is help people learn how to work their size, how to view the trend, and then you don't really need to know what happens. You just use that news, or we're going to use the GDP print to our favor. Okay, so I took my size down, meaning I sold some of my futures, my long position, because I want the opportunity to buy bonds cheaper. If the market, for whatever reason, thinks rates are going higher and that means they're going to sell bonds or sell the long end, then I would love the chance to buy 30s back here again around 170.20, 171 the buck. All right, and if they take them higher, fine. I'm a little bit long. We'll take some profits into 175. Who knows? Maybe the market runs up to 176 tomorrow. I mean, I'm not so sure even that if you do have a better GDP print that bonds don't rally also. I mean, the bond market's been pretty good about sniffing out growth slowing, and so the market could say, you know what, stronger dollar stronger dollar means slower growth, and they might, it means, stronger dollar means the Fed's going to get hawkish, which is bad for, which is going to slow the economy, and they might take slower growth. They might take long bond up anyhow. So it's kind of, so you see, it's too much back and forth. That's not the way you want to trade. You want to just be able to take advantage of whether we bounce or we sell off. So that's the game plan for the long bond tomorrow. I'll kind of reiterate that in the room. Stocks, it's all about this 2150 area, right? 2150, 2155. We just keep bouncing along around. 2170 on the upside. There's sellers. So this is kind of pretty much a boring trade. We really need to see a weekly closing below 2150, and then maybe you'll get the pullback. But everyone's looking for the pullback, so I think the pain is still probably higher. But we'll see. We'll just trade what happens. If it breaks the low here, I already have some puts against my longer term long positions, so I'm going to try to get out of those. Obviously, not really interested in shorting more. Maybe I'll short the Nasdaq if we take out these prior lows. But again, I'm more bearish. If I want to sell stocks, I'd rather sell stocks in Europe, or I'd rather sell Japan. All right, we're short the Nikkei. Covered some stuff this morning. Pretty good covers down here. So I'll probably put that out. I'll probably reshort again around 16,800. I'd really like to sell at 17,000 area. So that said, also, the Bank of Japan's buying, and everyone keeps using this helicopter money term. I really wish they would stop, but it's just the media loves to grab something and just hang on to it. It's just become a real joke. The Fed has pivoted how many times? 5 or 6 times this year. They have zero forecasting ability, and they're literally just chasing the S&P's tail around. They got hawkish in December with the rate hike. January and February, the market craters. They panic. They go to dovish. The market rallied into April. They flipped and got hawkish. Then the May jobs report was terrible, right? Then they went back dovish. And then now they're back hawkish again. It's just a joke. So I don't know. Whatever the Bank of Japan wants to try to do, it seems like the belief system is breaking down over there as well. So I'm not sure how much lower they're going to be able to talk the currency these days. The yen's been so strong all year. I guess let's look at. But that said, I just don't want to have a lot of risk on in front of the news, that BOJ statement, while I'm sleeping. So there's a lot of room. Pound yen could rally back to 150. Anything can happen overnight. So I'm going to maybe stay small short just because this trend's down, but I don't want to have a lot of risk on. If it's a non-event, I'll just get right back in where I was today as far as my position size. Hopefully that makes sense to you guys. It's better to just take your risk down in front of these big central bank policy statements or rate decisions. Same thing on the dollar yen. We'll see 107.5, 108. I may offer some out there, or I don't know. I might even be up. We'll see. That pretty much does it. I think, gold, one last thing, gold, it's the same kind of thinking. The market's a little confused whether, all this bond buying is good for gold or not. But I'll tell you, the correlation is correlated pretty highly to the dollar, which is rare, but it is what it is. So we could see dollar up and gold up. That's been pretty highly correlated. I think at like a 90% correlation rate. So anyway, I was saying that the bond picture and gold picture looks very similar, and it has. So we were buying dips in here, and then I realized a lot of profit today and yesterday. So I bought some 1350 calls, and I may, again, just because of the Bank of Japan and this GDP print tomorrow, I may just take some of my futures off, and hopefully that way if we get a dip, I can buy more. back around this 1320, 1311. You know, this was all a buy down here. So when you get back to the bottom of the intermediate term range, you know, we took some profits here and here. So I'm happy to rebuy 1335. Maybe the market gives us a gift and we could buy something back at 13 and a quarter or so. That'd be great. So that's, again, if you get a little bit, lighten up on your risk so that you can buy more if the market anticipates whatever number we get, and you sell off, then you can buy more. And if it continues with this uptrend that it is now in on the hourly and 4-hour, an intermediate bullish uptrend, you know, I won't make as much money if I take some risk off today or in front of tonight and tomorrow, but it's a win-win. I get to buy more if we break lower, okay? If we go higher, I'm still going to make money. So that's kind of how you play it. I think that pretty much does it, guys. If you're new, visit the site jenkinsrm.com. I have a free trading room. A lot of forex traders, futures traders. I mean, the goal is I'm building a team of both independent and professional traders, and we're going to trade everything. And I'm also doing an options seminar coming up. I'm going to do 2 dates, August 6th and then I think it's the 27th, that last Saturday in August. And the goal of the options training session is I'm going to teach you how I use vertical spreads, how I leg in, leg out. I use a lot of ratio back spreads for my longer term positions, and that allows you to control really a good amount of stock, or you can create a long, pretty heavy delta position in an ETF or a stock without putting up a lot of capital. So it's a small risk strategy with all the upside, and virtually nobody ever teaches on it. That's a ratio back spread. I use that in 80% of my long positions. I swing trade with it a lot. And then I also go over some strategies that we use around the ETFs, a lot of leverage ETFs that I like to go short and take advantage of the decay when we want to express a view directionally in the market. And you're going to get a lot. It's a one-day session all day. You're going to get a lot for 10 years of my institutional experience trading directionally, and I'm going to show you how to actually use options to make money around these strategies and around my model. So you get a lot for the price, and if you've ever wanted to learn options or you want some more advanced strategies, that's something definitely I would encourage you to sign up for. So I think that does it. I'll talk to you guys in the morning. Have a good evening.